Folks, you better get ready. In today's video, we are going to break down one specific stock that is screaming buy right now. If you are looking for a cheap, beat down, but absolute monster as far as growth goes, well, this is the stock for you. This is an explosive growth stock that many people are sleeping on right now. In today's video, I'm going to break down exactly what this stock is, but first, of course, we're going to give the latest on the market and plays, specifically Palantir and HIMS, which just reported big earnings. And we're going to get right to work, timestamps down below, but as always, if you are the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. And today's video is brought to you by our absolutely free email newsletter. Get daily rundowns on top ideas, catalysts, and research every single day. Sign up with that first link down below, completely free. If you're somebody who's always too late, you're not going to want to miss these reports. Okay, let's go into play. So our Palantir play just reported earnings, and before we go into what they reported, you need to know that this is a stock that holders have been tried and tested on 1,000,000 times. We screamed this was a buy for years and made innumerable different arguments for its upside, and even at $7 a pop, people said it's overvalued trash. This video was made September 6, 2022, not that long ago, and it's about 17x'd since then. But if you look at the chart, well, guess what? Since that September of 2022, do you know what happened? Not only did it go up over the long term, but there were many periods of time where you had fake outs where it would go up 50% and then drop 30%. Or you had periods where there was such dysphoria in the market that it dropped 80%. But the underlying business did great. So people that think that a business and a stock are the same thing are going to get screwed every single time. But people that know that, hey, a stock going down 80% while the business fundamentals are improving, well, that's actually a good dip buy opportunity. Palantir has always been a stock that I've been super protective of because the media slammed this stock month after month after month during some of the levels that were ridiculously low prices to pay. The media talked people out of their positions on the stock when the stock was at 1/17th, the level it is at now, saying, oh, this company is going to go bankrupt, you need to sell. But the company had zero debt. It had huge cash reserves and an exponentially growing business. Yet the media swore up and down and they lied and said, you need to sell this stock. And they did that because they wanted to make sure that their short selling side made tons and tons of money. But guess what happened? The truth came out, and the folks that believed in the stock and didn't fall for the lies, they made tons of money, and they continue to do so because the truth is here. But the games are still being played, and that's why it's so important that you follow what's actually going on here. The reason that I mention this now is because this type of trading will continue. You can already see on this earnings, which was a blowout earnings today, well, in the after hours, the stock's down. But before earnings, I mean, just look at the bigger picture here. Yeah, there's been so many periods of time where Palantir sold off and people said it was a scam just the last year alone. But if you look at the last year, it's up 390%. So again, I understand that every single time Palantir has any kind of red day or any kind of negative PR, people will say, oh yeah, this stock is overvalued hype. But let people say that, because those are the people that are going to talk people out of their positions and allow real believers to snap up even more shares. And I've been saying this again since $7. What's the point I'm trying to make? Well, with Palantir, this is a specific type of stock where you have to look at the long-term picture. Just like $7 was nothing, well, I believe in the coming years, current prices are going to be an absolute steal. That doesn't mean that it's not going to have more periods where it goes down 50%. That doesn't mean there's not going to be more periods of dysphoria and people yelling, sell, bubble. But it does mean that if you're looking at the underlying business, well, the growth is exponential. Palantir didn't just deliver today. They crushed expectations. Revenue surged by a powerful 39% year over year, hitting a whopping $884 million. That's a record-breaking quarter driven by massive growth in both their commercial and government sectors. If you look at commercial specifically, U.S. commercial revenue soared an insane 71% year over year, making yet another record quarter with revenue hitting $255 million. The company's U.S. commercial customer count shot up 65% compared to last year. Even more exciting, Palantir clinched an unprecedented $810 million in U.S. commercial total contract value, up a mind-blowing 183% year over year. This means that not only is Palantir expanding its customer base rapidly, but it's also locking in long-term contracts, ensuring revenue stability and growth for years to come. But that's not all. You see, Palantir, the tier of the Palin, revealed how they're not just growing, they're becoming essential infrastructure across major American industries. At their AIPCon 6, major corporations like Wendy's and Heineken showcased game-changing transformations using Palantir's AI solutions and their software. Wendy's CEO pointed out how they turned supply chain nightmares from weeks into 5-minute fixes. I love these case studies because it shows real-world examples of how the software that Palantir offers can really change your business. Heineken COO even stated Palantir accomplished in 3 months what previously took 3 years. Yes, you read that right. 3 years to 3 months. Palantir's partnership with the U.S. government remains robust and lucrative, with government revenues surging 45% year over year. The U.S. Army ranked Palantir's Titan as one of their top-performing AI programs, delivering cutting-edge AI-defined military vehicles. NATO's chief of staff specifically praised Palantir's Maven smart system for significantly accelerating critical decision-making processes in military operations. If you listened to the earnings call today and you read the earnings, it became very clear that Palantir is becoming absolutely indispensable to national defense strategies. The depth of these relationships with governments globally is a massive moat and positions Palantir uniquely in the AI defense space, but specifically in the US. We are hearing all year, oh no, Doge. Elon Musk's Doge is going to destroy Palantir. Doge is trying to make government more efficient. Well, government doesn't need to pay Palantir to completely transform its entire apparatus. No, of course it does. Of course it does, because Palantir makes things more efficient. So it never made sense that the government was going to cancel Palantir. Okay, let's talk profits. Palantir's adjusted operating income did absolutely skyrocket to $391 million, yielding an impressive 44% margin. The Rule of 40, a crucial measure combining growth and profitability, hit an astonishing 83%, one of the highest across the tech industry. Adjusted free cash flow also exploded to $370 million, boasting an extraordinary 42% margin. Palantir is not just growing fast, it's doing it efficiently and profitably, ensuring massive cash reserves, $5.4 billion with zero debt. That gives Palantir plenty of runway to innovate and expand without financial constraint. This is still one of the most shorted stocks in the market. Look at this report here from R1 RCM. They partnered with Palantir to drastically enhance healthcare workflows, and they reported improving economics by up to 50%. Citigroup's wealth division is leveraging Palantir to significantly boost client experience and operational agility. Insurance giant AIG predicts doubling its revenue growth by integrating Palantir's AIP into its underwriting process. Now, if you look at forward guidance, even more exciting, looking ahead, Palantir is forecasting another blockbuster quarter, expecting Q2 revenues around $934 to $938 million. Full year revenues are targeted around $3.9 billion, including at least 68% growth in U.S. commercial revenue alone. Strong profitability, exceptional management execution, and powerhouse partnerships, Palantir, in my view, is positioned to not just win, but dominate for years to come. So very happy, regardless of what the stock price is doing in the after hours. Very happy with what we saw here today. Let's talk about HIMS. So HIMS reported earnings after hours, and revenue up 111% year over year. Net income up 345% year over year. Adjusted EBITDA up 182% year over year. Operating cash flow up 322% year over year. Free cash flow up 321% year over year. Subscribers up 38% year over year. Monthly online revenue per average subscriber up 53%. So in other words, HIMS is getting more subscribers than ever, and also rapidly increasing the average amount of money they make from each subscriber. HIMS is printing, and we love to see it. Now, the stock is also a bit melancholy in the after hours. Why? Well, because the stock is up 50% in the last month. When you're up 50%, that means that people are pre-factoring in the numbers that you're about to report. So even if you report insane numbers, well, still, there's not much more upside in the immediate future. But at the same time, over the coming weeks, I expect more people to realize the trend this company is on, especially with that Wegovy partnership with Novo Nordisk. And I think that's going to drive a lot of growth in Q3 and Q4. So again, good job, HIMS, but the long-term growth trajectory is what you want to pay attention to here. Okay, now I'm going to get on to the next stock to buy, but first, before we even get into that, I want to explain the criteria that is tried and true and helps us find all of the stocks as far as long-term plays are concerned. So number one, you want strong EPS growth. Look for companies consistently growing EPS at 20% or more annually. Sustained growth indicates market acceptance, competitive advantages, and scalability. Number two, you want expanding profit margins. The company should show steadily improving gross and operating margins. Growing margins indicate pricing power, cost discipline, and efficient scaling. Number three, durable competitive advantage. You want a moat. Seek businesses with clear competitive edges, such as proprietary technology, unique products, high switching costs, network effects, or brand loyalty. These advantages protect growth and profitability over time. Number four, large and expanding total addressable market, TAM. TAMI. Identify companies operating in markets with significant growth potential. A big market provides what? It provides room for sustained expansion and scalability. And then number five, you want visionary and or at least a competent management team. Invest in companies led by leaders with a strong track record, vision, and execution ability. Management that consistently achieves ambitious goals indicates high future potential. And so what is the main stock of today's video that fits this criteria that also happens to be dirt cheap? Well, PayPal, PYPL. If you look at revenue, it's up 1.19%, which isn't insane or anything like that, but it's certainly beating a lot of its peers. If you look at net income, though, it's up 44.93%. If you look at diluted EPS, up 55.42%. If you look at net profit margin, up 43.28%. And of course, operating income up 16.83%. So overall, this company is figuring out how to manage its expenses and really increase its profit margin at the same time as solidifying the people that it already has in its ecosystem and slowly adding more. This isn't just incremental growth, it's a sign that PayPal is thriving despite market headwinds and competitive pressures. PayPal's checkout system remains unmatched, processing billions daily. The reason, well, an unbeatable network effect, trusted brand power, and continuous user growth. Now, markets are looking at this stock and they're thinking, okay, but this isn't that exciting. They're just making things more profitable, but they're not really acquiring that many new customers, right? But here's the thing. We already knew this going into the earnings. The company's new CEO is following a completely different strategy that is long-term in nature. He's aiming for profitable growth and not just customer acquisition. PayPal has already grown a lot and locked in many users into their ecosystem, but right now they're working to make them way more profitable per user. And then later on, they can circle back and focus on more acquisition. What is the point of growing tons and tons of users before you can actually get them to be very profitable? They're taking a completely different strategy than the previous team did. Management didn't just deliver on profits, they over-delivered, and Wall Street loves when companies exceed on profitability, but they just seem to be sleeping on this one right now. When hundreds of millions of people trust a brand with their money, there's a clear competitive moat here. But here's the thing. So PayPal isn't just sitting around counting the new money. They're actually spending a lot of money to innovate and expand their moat, their competitive moat, even further. The Venmo app is exploding in popularity with total payment volumes growing 14%. Now, again, this is a very mature company with very big numbers. For these segments of this major company to be growing this fast, that's a big stinking deal. PayPal Checkout and Braintree, two powerhouse solutions, also showed double-digit growth. That means that PayPal isn't just winning in one lane, they're dominating across multiple payment segments. Speaking of innovation, though, PayPal's aggressive moves into digital wallets, buy now, pay later specifically, and next-gen financial services are paying off big time. PayPal's not just riding the buy now, pay later wave, they're surfing it like a pro. But the market just doesn't want to price in any of the upside right now. Payment processors, and specifically PayPal, just seem not to be super exciting for markets. But again, proof of concept here, and the value that you're getting for your dollars are insane and suggest massive upside ahead. PayPal's resilience this quarter proves they're insulated better than most from economic swings, yet they're still not doing that well in terms of the stock price. I think that's a value gap. Consumer spending remains strong, e-commerce is booming, and PayPal is perfectly positioned to capitalize on this ongoing digital shift. Management is clearly bullish. We're seeing insiders buy the stock, and more importantly, the company itself repurchased a stunning $1.5 billion in shares this quarter alone, signaling high confidence from within. Buybacks on this scale scream confidence louder than any earnings call ever could. And the bottom line here is that PayPal isn't just a payment company, it's a financial technology juggernaut, diversified revenue streams, and exceptional profitability. Looking forward, the catalysts are stacked. Number one, continued aggressive share buybacks. Number two, expansion into lucrative financial services like, again, buy now, pay later, and digital wallets. Number three, sustained double-digit growth in total payment volume and user base. 4, improved margins as efficiency and cost control accelerate. And 5, bullish consumer trends that favor digital-first financial platforms. Folks, in my view, PYPL is a must-look at right now. We've liked PayPal for a while, and I've long believed they were going to succeed at their pivot. And this management team that's running them right now is doing a great job, and I expect these prices not to last for long. Anyways, that caps off today's video. Have a great rest of your day. Let us know what your favorite stocks are down below, and we'll see you in the next video.